Hello, 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 and welcome back to the Foreclosure Deals Coach podcast, the show where we discuss how to find, figure, fund, fix, and flip a foreclosure deal right here in the Colorado marketplace. And if you've been tracking the marketplace at all, you know that sales are off substantially from really where they were 2 years ago. Last year and this year are about the same, but in either case, you're looking at a 50% drop in overall sales volume. We're at the inventory levels are nearly double, in some cases triple what they were last year. And all of this begets the question, is now a good time to invest in real estate? Well, that's an interesting question, right? Because on one hand, if the things aren't able to sell, if you can't retail your property, then investing right now is obviously not the best move. On the flip side of that, when is the right time to invest? When things are on sale, when they're cheaper in price, right? So here's what's actually happening. Retail is definitely slower, but it's important to note that as you look at the retail statistics, you're not seeing a big drop in retail pricing. What you are seeing, because there's a huge amount of inventory compared to where we were last year, is you are seeing a substantial slowdown in how long it takes to sell property. And my clients are definitely feeling the burn from that. We are noting that it takes maybe, where we would have guesstimated 30 days on market, we're pricing with the 30-day rolling average, which is the number we determine based on how long it should take to sell a property in 30 days or less. Today, that 30-day rolling average is taking closer to 60 days to get the property actually sold, somewhere in between 45 to 50 days. But the reality is we're definitely seeing a longer time on market. Obviously, this is bad. But in the investing space, we're not in a rush, are we? Now, the sooner we get the property sold and flipped and move on to the next one, the sooner we can get to the next deal. So there's an obvious opportunity cost that comes from selling the property sooner rather than later. But overall, it's important to not be in any sort of rush when you're selling real estate. And I'm going to tell you a quick story here. After flipping 40 houses in 1 year, 47 houses the year after that, and then 45 houses the third year, my wife and I learned one very important lesson, and that is we don't want to flip that many houses, right? But the real reason we didn't want to flip that many houses was not because it wasn't super lucrative. As I'm sure you can imagine, we were averaging $30,000 to $40,000 in gross profit because the market was tipping upwards. And I'd love to sit here and tell you that we were just geniuses who timed the market perfectly, but I'll be frank with you and say it was kind of happenstance. What we did have was a system in place that made it possible to find, analyze, fund, fix, and flip that many deals prior to the market getting to that point. If we were trying to build systems, as a lot of investors were during that phase, we would not have been able to keep up with the demand, and it would not have gone as well as it did, right? So the timing kind of aligned with our systems were in place, and then the market was highly conducive to flipping, because by the time we finished the house, it was generally worth 3 to 5% more than it was when we started the house. Never truer than the Springs Hell house that we completed right here in Colorado Springs, Colorado. It made national news because the condition of the property was so bad that the agent did a real bang-up job of showing the graffiti, and there were some dead cats left in the laundry room, which was really unfortunate, and it smelled really bad. It looked really bad, and this was in a luxury home in a luxury neighborhood in Southwest Colorado Springs near the Broadmoor. Okay, so none of the expectations were that a house should look like this in that area. We bought the house mostly because the numbers were awesome, but also because the opportunity to actually get some celebrity press for the system that we had created was also a dual benefit why I wanted to buy the property. Well, it went better than expected. We bought the property for $580, expected to sell it for about $775 to $780. We had some delays in construction, which ended up making the property worth about $830 at the time of sale. So we made more money in the property than we originally intended. We cashed nearly over a six-figure check on that deal and made the national news at the same time. Incredible opportunity. Okay, we're not doing this for the fame or the fortune. This comes down to the money, as you guys well know. But if you can also get some celebrity access, it was a benefit to the system that we're now offering now, the foreclosure profit system that we're offering to people just like you to help you to find deals. All this is to say, what is the market doing to us today? Should we be buying deals today? Well, when the retail market suffers, as it is right now, we're obviously doing less sales. Agents are largely getting out of the business. It's a rough time to be in retail real estate. There's a huge benefit on the other side of the market, the less known side, the wholesale market. And though we saw a bit of a slowdown a few months ago, I can tell you in the last few weeks, we are being inundated with wholesale opportunities to buy deals. Every wholesaler in town seems to have lit up. Colorado Springs, which we couldn't find deals in for about 3 to 4 months, there just wasn't a ton of opportunity, now is lit back up. We're getting deals left and right. So the answer is, as long as you are buying a deal, a down market is actually a better time to buy. And that seems obvious, right? You don't want to buy when the market is at its all-time peaks. You want to buy when it's in the valleys. Well, we are definitely in a valley right now, so this is an excellent time to locate your deal. It's not such a great time for some of my clients who bought deals closer to the peak, and now we're trying to get out and we're dealing with the longer days on market, et cetera. But what we're not really recommending is a huge drop in prices. What we're recommending instead is that it's going to take longer to sell, and as a result, your holding costs are going to be a little bit higher. And the net result of that is you could make a little less money per deal, but it doesn't generally result in no profit. It just means a slightly reduced profit for the extra month or two of holding costs. Well, in Pueblo, where we're doing a lot of deals right now, that's a cost, but it's not as high of a cost as it would be in the Springs. The math on this is simple. If you're buying a property for $300,000, which is our average acquisition here in Colorado Springs, at 12% interest, that's about 1% per month you can expect to pay for the holding costs, right? That's $3,000 a month. Obviously, that could eat into your profit relatively fast. We've been buying a lot in Pueblo, though, where we're buying for 120 to 130. Same 12% math means one payment in Pueblo is a third of a payment here in the spring. So you can actually hold on to it for 3 times as long. The takeaway from this is when the market is fading, we want to get out in front of that, which we did, and started buying less expensive homes to anticipate the longer holding costs. All of this is to say is the foreclosure profit system is able to adapt to any market. I've been in this business since 2007. Okay, I did my first flips when my daughter was just born. She's 20 years old now. Okay, so and I remember carrying her on the patio of a property we bought in downtown Colorado Springs at 439 East Bijou. They say you never forget your first one, right? We bought that property. I brought her there, did everything wrong, managed to make a profit of $17,846.32. But who's counting? Okay, the real takeaway from this is any time's a good time to buy an investment deal. And that's what I really need to impart upon my clients. You have to understand that though market conditions are moving in and out, it's kind of like day trading stock. You can't really operate based on what the market's doing. You got to operate on your individual analysis of that individual property, not the emotions attached to it, not it's to some degree the speculation of what's going to happen in the future, but you really have to use current market data to make your determination because that's the most accurate data you have. Is it constantly changing? Yes, it is. Market goes up, the market goes down. The hard part of this is not getting emotional about those market shifts. If you guys are just tuning in right now, thank you for being here. First of all, appreciate your viewership. Hop on and comment. Let me know you're here. I really appreciate you guys checking out the show each and every single week. And if you have any questions, I will absolutely slow down and address those questions. If you have any questions about real estate investing, the market at large, that's what this is about. This is live. I'd love to hear from you. Okay. So let's continue on here. Is now a good time to buy? The answer is always yes. But what we're doing differently today is we're really A, adding more holding time, and B, obviously looking for a lower price on the acquisition side. We have to find a wider spread today than we used to need to find to get our net profit of $25,000. But that's an important thing to know. Whereas most investors, obviously more money is always better, but where investors get caught up, in my experience, is swinging for the fences on their first deal. We've all seen the flipping shows where they're walking out with $50,000, $80,000, and don't get me wrong, having done it on the Springs Hell House and several other properties where I've made a nearly 6-figure return, it feels amazing. And I definitely don't want to take that away from anybody, but I will tell you it's not sustainable, it's super risky, and it's just all out, flat out dangerous for a rookie investor who's getting started in the game. So what we're looking for is consistency. The best way to learn how to flip properties is to do a lot of flips. Okay. And to get there, you're going to have your ups, your downs, your sideways, etc. We can generally predict to some degree the outcome, but because this is an investment vehicle and all investing involves some degree of risk, we can't ultimately predict the future of any of these investments. What we can do is predict what we believe the purchase price needs to be to make it worthwhile and only buy at that price or below. We can predict what the rehab costs are going to be based on our project management team, construction estimates, current price materials and labor, etc. Right? And then we can predict to some degree what the sales price is going to be based on current market data that is selling within 30 days or less. Those predictions lead to profitability, but we leave enough of a fudge factor in between that we don't have to guarantee anything to make this a predictable, profitable flip for you. Okay, so when you're entering the program, you're coming with the knowledge that this is investing. If it were guaranteed, fun, or easy, literally everybody would be doing it. So why are only certain people doing it? It comes down to risk tolerance. And if you don't have a pretty decent risk tolerance, this is not the right investment vehicle. And we're very straight up about that with my clientele. A lot of people need to be doing mutual funds. They need to be doing, stocks and bonds and very predictable investment vehicles. You can make money on that in the long term, averaging 4 to 6% over 20 years. It's an excellent way to get a return on your investment. But for the clients I'm working with, the risk tolerance is a little bit higher. And especially when the market the press is beating up the market, saying how bad it is out there, the smart, savvy investors are quietly buying up more deals. I can tell you that we went from crickets in the investment market for months on end to bidding wars, and nobody really talked about it. It was kind of a thing where it's just people were not buying for a while, but when the investors got hungry again, and they always do because there's so much money to be made in this industry, they hop back in. We're now competing on deals once again, and you're not getting that from the retail market. You're definitely not hearing that from the press, but generally speaking, you're not going to make money following what the general public is doing. The key to making money is to kind of go against what the market is saying, right? So if everybody is saying to buy, then you should probably be selling. And if everybody is saying to sell, it's probably a good time to buy. Okay. Today, sellers are really struggling because buyers don't want to buy as much. Why? Because interest rates are higher and they've got a ton of options, right? So they're going to look at a lot more houses. Buyers are a lot more picky than they were before. This is a huge advantage for us as investors because the houses that are selling, keeping in mind that less houses are selling, but the houses that are selling are the nicer properties that have been updated, remodeled, teched out. They're fun to look at, right? The general buyer, especially the retail buyer, who's generally not as educated, right, is not looking to buy a property and then spend 30, 40, 50 grand fixing it up to make it their home. They weren't really willing to do that when rates were at 2 to 3%, but they were far more likely to look at a house that needed a ton of work when interest rates were lower, right? Because the payment was lower, so they could take some of the money they were not spending on the payment, they could invest in the property. Now that rates are at 6.8 to 7%, that is simply not the case. The gorgeous houses are going to be the ones that sell at consistency. There are less gorgeous houses on the market than there are normal retail properties. So as a result, the investor, although they got to wait longer to sell, is actually at an advantage in the current market. Okay, so it really is counterintuitive to what you're going to hear in the media about real estate in general, and it's really counterintuitive to what you're going to hear from the retail real estate agent. If you have a conversation with a retail real estate agent right now, you're going to hear about how bad it is, how slow it is, how long it takes to sell a property, and none of this is inaccurate. If you're a retail seller in this market, you are being forced to wait longer to sell your property. Unless you're heavily motivated, though, you're not necessarily selling it for less. Right? You're not seeing a ton of price drops in the marketplace right now. Sellers are holding on to their pricing because supply and demand, even though there's a ton of supply right now, there's enough demand for nice housing and enough people who need to buy nice housing that there's not a ton of reason to drop prices just yet. What does the future hold? Well, my crystal ball is just as unfunctional as everybody else's right now, but we're in an election year. And during an election year, things are normally weird. Right? That's the best way to describe it. If you go back every 4 years, about this time, a few months before the election, you're going to see a massive change in the real estate market. People don't really know which way to operate. There's a ton of division in the marketplace right now. People are concerned whether they're going to keep their job. A lot of people just are paralyzed by what's going on in politics. I'm definitely not one of them, but you do have a lot of people who just don't act during these times. You can see it in the stock market. It's hard to determine which direction it's moving. Overall, it's up, right? But it's hard to pick a direction right now, mostly because we're in election season. So the general consensus is we got to ride this out until November when a new president is determined, and then we're really going to know what direction it's going. The question for you is, do you want to wait until November to get started in your investing career? If the answer is yes, I respect that. But for my investors today, we're realizing that getting set up, doing deals right now is better than waiting until the market catches up and it gets more competitive than it is right now. Okay, so we are buying deals, better deals for sure. We are doing a better job of estimating the construction than we ever have. We're bringing on a slew of new project managers to help us work through the projects as we get going. We're getting more education of remodeling space. We're watching the trend analysis closer as to what colors are trending. Blue cabinets are everywhere right now, driving me nuts. I don't know why that's even a thing, but it is. So that's starting to take off. We are watching the trend analysis. So as we are doing deals today, we can figure out the best systems, the best actions to take as things move forward. Okay. This for me is a better route than sitting idle and waiting for the market to get conducive to investing. But it is entirely up to you, obviously, because it's your money. So if you're thinking about getting involved in real estate investing, if you're in the exploration phase right now, my advice is we should have a sit down, a conversation where we can determine, based on your current financial landscape, the fact that holding costs are going to be longer, etc., whether now is the best time for you to be buying a deal. If the answer is no, let me tell you, I'm going to be the first one to tell you that. Okay, I am looking for investors who are in a financial position to capitalize on the current market. And if that does not describe you, I'll let you know about that, and we can do this another time. But if you've been on the sidelines for a while, wondering if now is the right time to get in, let me tell you, the opportunities we are seeing today in the marketplace are absolutely staggering. What we can buy stuff at today will blow your mind, but you got to be committed to the process, the learning, the education, and the systems that make investing a possibility. All right. So with that, I'm going to open it up for questions. We got about 2-3 minutes left here in the show today. I see that a couple people are still watching. So if you have any questions out there, please go ahead and post a comment. Let's discuss that. But just some upcoming changes in the environment. We are now working on a warehouse line of credit so we can buy the properties a little bit sooner for our clients, and then we're going to refinance them into hard money. So that's going to expedite the process, allow us to buy better deals, because most of the time the deals that we buy are based on the speed in which we can buy those deals. We're also having conversations with banks about construction loans so we can refinance that into hopefully slightly lower rates. It takes longer to get that done, but with the warehouse line, we'll have a little bit more time to get them properly underwritten, and the construction loan process is much harder because you have to provide construction estimates and bids and et cetera. But the net result is, because we now have to adapt to longer holding times, we should be able to borrow the money at a slightly lower rate than we could before, which should allow more profit for the clients to buy the deals. Everything about the foreclosure profit system, guys, is designed to make my clients more profitable on each deal that they do. The goal is simple: 50 clients doing 4 deals per year at an average of $25,000 per deal works out to a huge amount of money for the system, a huge amount of money for the clients that are doing deals, and a long-term future for the people who get involved. We just signed client number 40 into the system. I want to get 10 more active clients. Once we have a full 50 active clients, we're going to be looking at other regions and expanding this market into, for me, a warmer area is my goal right now. We'd certainly like to start buying houses in places that don't have quite as much snow. So I've got an excuse to head out there during the winter months and kind of bounce back and forth. And we do tend to slow down a little bit in the winter months because it's harder to get construction done. The houses sit for a little longer during the holiday season, et cetera, et cetera, et cetera. So we have a bunch of reasons for looking at other markets. And just overall, we're tracking foreclosure inventory, how many foreclosure filings are happening, and locating areas that have a huge amount of foreclosure activity, because that's where we're going to find the best deals. And the best deals are what translates to the most money for the clientele who join up with the foreclosure profit system. So that really is our time for today, guys. I appreciate all of you tuning in, as always, to the the Foreclosure Deals Coach podcast. Love that you guys are always here. If you have questions, please reach out to me. Slide up in my DMs, message me, text me. I'm available all over social media. Would love to chat with you more about how to get your investing career started or expanded if you've already done some deals and want to learn how to get to the next level. With that, this is Donny Coram, your Foreclosure Deals Coach, thanking you as always for tuning in and reminding you now and always, don't buy a house, buy a deal.